Okay, the last one is China. China again, I look for growth stocks. So, but I do agree with Kit Kuen. So China also give very good dividends. Yeah, for those interested, you may actually also want to use some of them for dividend stocks. I personally don't. Maybe it's something I will look towards it in the near future, but currently I don't. Okay, so for China, the growth plan is a little bit different. Okay. So for China, I don't have to look for small stocks or high risk stocks because China, they're actually still cheap. Okay. They're actually still cheap. So this is the China Shanghai Index over, as you can see, over the past 20, 30 years. It hasn't gone up very much compared to US. US, if you were to look at US, it's actually shoot up. China hasn't gone up very much. And if you look at from the P perspective, um, okay, thanks, Chunun, for sharing. So yes, please take note of all the dividend tax. Okay, so China from a P perspective, the Shanghai Composite P only with 10.2 leh. Okay, that's very low. Okay, that's very low, and S&P is 28.77. So my point here is this: China is still cheap lah. So again, it's a function of risk. If let's say you find one China small cap stocks, and they suddenly develop well, will the price go up like crazy? I think sure you can get, 10 times, 30 times, so on and so forth. It's still possible. But I think easier, what we call low hanging fruit, you just buy established company and just wait for the price to go to fair value. Because this kind of PE, that means from a global perspective, a lot of these stocks are undervalued. Okay. So what I call the low hanging fruits. That means a good company undervalued. Okay, then I rather put my money there rather than play high risk. Of course, that one high risk is for personal interest. But given a choice, right? I think to find growth stocks that is a good company, is undervalued. I think the probability of success is definitely a lot higher. Also, China actually give us such opportunity. Okay, given that the whole market is actually still quite cheap, and yet they are doing quite well. I mean, you look at the technology wise, is they don't lose out to US at all. Okay, so basically, I just want to capture growth through rebound. They grow because it's undervalued. They're undervalued now. Okay, rather than US, the game I play is they grow is because they are developing new things. They are doing more product. So for China, my growth strategy is because they grow because they are cheap. Okay, the valuation should go up based on what they are already currently doing. So hope you all can visualize the different my different strategy for different markets. Okay, then of course, why I believe that eventually the China, at least in terms of PE, should actually be on par. Okay, you are talking about next, actually in the foreseeable future, China, they're going to be the largest economy. So why should their PE be like, one third of the current US PE? It doesn't make sense. Or this is at least what I believe. Okay, so how my strategy for getting into China, okay, I am more into broad base, China broad base, because like I said, broad base are actually most of the stocks, they are cheap. So I don't really want to, no, don't really think you need to go and what do you call cherry pick. Okay, so in that sense, you can just focus on ETF. And the good news is, again, for those who just want to focus on SG market, you can also get exposed to China with the China ETF listed in SG. So basically, you want to participate in China growth, you can still just do it with SGX market. So yeah, I must do a bit of marketing for SGX. Okay, since I know all you from SGX, okay, must help SGX do a bit. So it doesn't mean that, oh, you must go and invest in Hong Kong market, US market, or whatever. if you want to participate in China growth, you can also just do it just via SGX market. Okay, so ETF, same thing. Maybe I just do a very quick demo. You can just do okay, the one that I have actually selected not too bad. So of course there are some to be careful. So same thing is the fund size. Also make sure the fund size is more than 100 mil ETF. So geography focus China. So you have quite a bit. So same thing, I have short list only three, more because of the fund size. Fund size, make sure that the fund size is at least 100 mil. So these three liquidity okay. So XT minus. So this one is the broad-based China. And if let's say you are focused on tech, we have one. This one just focus on tech. Then this one is okay. This one is a bit small, so have to be careful. So why I like this because it's actually into EV. Okay, into EV, which is something I believe greatly. Okay, I'll talk more about the EV later. Okay, so this one have to be careful. The fund size is actually quite small. Why I consider just because it's EV, but these two is actually quite okay. The fund size is actually quite large, so don't have liquidity issue. Okay, now for those who actually want to do what you call auto DCA, that means you just set up, then every month there's a gyro automatically deduct money from your bank account to actually go and invest in a China fund. Okay, you may actually want to use this thing called unit trust. Hopefully you all know the difference. Okay, there's actually this thing called unit trusts. Yeah, can maybe we can talk about it later. Okay. Um, okay, FSM1 is actually quite user friendly. Of course, the other player is actually Philip. So I use FSM1 because the website is clearer. Okay, not that I'm related. Okay, so there's actually this thing called ETF. There's actually this thing called funds. Okay, can someone tell me what is the main difference? What is the main difference between funds and ETF? Okay, can someone try? Can someone try? Maybe just one person try. What is the difference between funds and ETF? Thank you so much. It's just a matter of where are they being distributed, where you can buy them from. So ETF, they are listed in stock exchange. You can buy and sell in stock exchange. Okay. Whereas funds, you want to buy funds. So traditionally, we can only buy funds from who? From your insurance agent. You go to the bank physically, go and buy the funds. So funds is not listed. ETF is actually listed. You can buy and sell just like a stock. So that is the main difference. Okay. If not, both of them hold a basket of goods. Okay, both of them hold a basket of goods. Okay. So the benefits of funds, if let's say, for example, if you actually want to invest in China, and the one of the reason why you want to consider funds, if let's say you want to do auto DCA, that means you set up, or they call it the RSP lah. RSP, okay, like for example, FSM1, you can lock in and say, okay, every month I want to invest 100, 200, 300 in this fund. Then you set up, automatically they will deduct money, just go and put for you. Okay. If you actually want to do that, the fund will be better. Why? Because there is no sales charge. Every time you put money in, okay, there isn't a charge. You invest $100, your $100 go into the fund. Okay. How they charge? They of course they will charge a fee lah. They charge is by annually lah. So end of every year there is a fee based on how much you have invested. So again, you're not paying extra. They will just deduct either from dividends or either that from your units. So you don't have to pay extra. Okay. Can you do that for, can you also do the same for ETF or not? Yes or no? That means ISP on ETF. Can you also do the same? Anybody want to make a guess? Can I do a ISP on ETF? That means every month just go and buy automate. Yes or no? Anybody want to make a guess? Thank you so much. You can. But what is the downside? The downside is if you do a ISP on ETF, every time you buy, there is a charge. Okay, there is a sales charge. So unless your RSP is every month you invest quite a bit, like maybe I don't know, I don't know what's the threshold. I think 1,000, 2,000. Okay. If not, it's very expensive. So let's say for example, if I'm not wrong, the minimum for minimum transaction cost for RSP for ETF is about $10. So assuming you do a DCA, then every month put in 100 into ETF, then only $90 get invested. Whereas you put in a fund, $100 will get invested. Okay. But of course, if let's say I think it's $1,000, then maybe net still okay. Because ETF, their what they call that, their annual fee is a lot lower lah. Okay. You can see here. Okay, can't see, sorry. ETF, their annual fee is a lot lower. But then ETF, there's a sort of like a transaction cost. Huh? So unit trust, there's no transaction cost, but the annual fee is higher. So it really depends on what is the dollar value that you want to invest every month. Okay, in hundreds of dollars, definitely unit trust is better. Okay, because like I said, the minimum for ETF is about $10. Okay, but if let's say it's a larger size, maybe ETF can be lesser. Ken, I hope it's not confusing. So in short, um, unit trusts, why I would consider China unit trusts, or yeah, unit trust and funds is the same. Okay, Irene, answer your question. Fund, trust and funds is the same. So if I or why I would consider unit trust is because I want to do the DCA and my value is in hundreds. Oh, so of course I can also look at China ETF that is actually listed globally. Okay, so you can have like China ETF listed in Hong Kong Exchange, Shenzhen Exchange, NYSE, so on and so forth. Okay. So same thing, same rule apply. If you want, you actually make sure that the fund size is at least 100 million. But actually down here you can find fund size more than 1 billion. Also not a problem. So you may actually the general rule is the larger the fund size, the better. Okay, so that the fee will be lesser lah. Or either that, it's actually more efficient in terms of the fees. Okay. So like for example, personally, if I just want to buy and hold, I use the SG one. I do this because I want to do DCA. And down here, I am also using a US China ETF because I do options trading. Okay. So if let's say I want to trade options with a China ETF as underlying, then I have to use a US ETF. If not, the three of them underlying all about the same one. Okay, they're underlying about same. Generally speaking, if the China market go up, all the ETF all will go up. China market go down, all the ETF will come down, generally speaking. So China, as I mentioned, I will depend on ETF, but there are certain sectors actually quite interesting. Okay, the banking sector is actually quite interesting. So again, how I come out here, I just ask ChatGPT again, list what are the top China banks. Okay, list the five top China banks. Okay, you can put it in table form, whatever. So I just want to echo what Kei Hui mentioned just now. China Bank now quite interesting. Now you can see the PE. PE is very low. You see, DBS is, if I'm not wrong, smaller, probably smaller than some of the Chinese bank. Okay, and yet the P is higher, like double. DBS is about 11 times. Okay, their dividend yield is 6.8, 6.9, actually very good. Okay, so if I were to invest directly in a stock, maybe banks, more from the low PE and high dividend yield. Okay, something quite interesting. Uh, oh, no, no, yeah, of course. Okay, PB will be, okay, so Stefan, answer your question. So PB, I actually use all three, PB, PE, and dividend yield. So every time when the PB below 1, that means to me bank is super cheap. But if PB above 1, doesn't mean that bank is expensive. I also look at PE. Okay, so answer to the question is we should look at all three lah, all three. Now in this case, um, I'm trying to compare the valuation of a China bank and a Singapore bank, and I think I can use PE. And based on this, I think the China bank is undervalued lah. So there's no reason why China bank the PE is so much lower than the Singapore ones. Okay, hope it's not confusing. If you are, maybe you stay back a bit, we discuss. But to answer your question, no, we should look at three. It's just that usually when PB below one, to me, it's a no-brainer. That means it's super cheap. But it doesn't mean that PE is not useful. Okay, can Okay, tech companies, China tech companies, I'll be looking at same thing, the five largest. So the names came out Tencent, Alibaba, China. So why I want to focus on China tech because they may be the best globally lah. So I do believe that now the tech wise, China is equal, if not better than the US. This is my personal opinion. So US come out with okay, no, not US. In fact, US haven't come out with the full phone yet. So China already come out with three four already. Okay, so yeah, I think uh, if I want to invest in Chinese company, yeah, probably some of this. And of course, you look some of the PE actually still quite okay. And lastly is the EV companies. Okay, I'm actually very interested in the China EV company. Okay, I believe they are going to be like Japan in the 1990s. So if you remember, pre 1990s, we have a lot of different type of cars on. We have like Ford. Okay, there's a lot more Ford on the road. Then we have I think Chrysler. Okay. We have European. We have like more Peugeot. Then we even have Australian car Holden. But in the 1990s, I think to even like early 2000, only see Japanese cars. They basically wipe up all the other countries. I think the Australian car company also took already. Okay. So I believe the Chinese EV car is going to is going to be the what do you call it? Uh be the Japanese car company like the 90s. So next time we only see this kind of brand like Xpeng is out. Now I see more and more Xpeng on the road already. I hope they can find a better name. I want Xpeng very funny. So anyway, BYD, actually I'm very impressed with BYD. The price is so low and yet they look quite nice. Okay, so I think China EV, yes, our as a growth company, I think it's actually quite interesting. Even though you can see some of them are actually not making money yet, P very high, but this is definitely in my watch list for China growth stocks.